What's up, guys? What's going on? What's going on? Let me just turn the music down a little bit. Give me a quick sound check. Quick sound check because I haven't done a stream in, damn, I don't know. Got to make sure this stuff is working still. What's up? What's up? What's up? Yeah, showing the face. She's great, man. She's great. Being a dad is it's an amazing thing. What's going on, Cornholio? Thanks, man. It's been a while. Today is the 24th. I don't remember the last time I streamed, to be honest. It was at least 2 weeks ago, right? Because I streamed after she was born. Well, actually, she was born over a month ago now. Anyway, I want to stick to the markets. I don't want to get too lost in the beginning. Going off on a tangent. Just say hi to everybody. Sound is good. Check, check, 1, 2. Nick, I don't know if that means the sound is good or if you're just doing the check, check, 1, 2. Fam is good. What's up, Banga? What's up, bud? I got coffee with D Speedwagon this week. We missed you. All right. I just need one comment alone about the sound. Yeah. Nicola is yeah for the sound. Sound is good. Okay, awesome. All right, guys, what's going on? It's Tuesday. It's the latter portion of January already. And we had a really good month. Really good month so far. I started the year off really strong. I'm sure a lot of you guys did. Markets as a whole starting off really strong. I think the S&P or the NASDAQ is up like 7 or 8%. So, yeah. I don't know if you could continue to just extrapolate on that moving forward. I doubt it, but it's been good. It's been good. The market has been rewarding, hopefully, for you guys as it has for me. All right. Yeah, real quick. I plan on getting back into streaming more consistently. I've been really enjoying my time with my daughter and getting used to that and getting used to the new sleep schedule. And that's not even that bad, honestly. Like, people talk about the perils of parenthood, like the things you have to look forward to, obviously amongst other really wonderful things. But one of the, often repeated issues is people losing sleep. Honestly, you love your child so much, hopefully, that shit doesn't even matter. But anyway, I've been going to bed early, getting up a lot earlier, so it's not that bad. So I go to bed now probably around 9:30, 10. If you see me tweeting after that, tell me to get to bed. And I wake up around 4:30, 5 o'clock in the morning. And honestly, it doesn't bother me. I'm used to just trucking through any situation regardless. All right, so welcome to the stream. Hit the subscribe button. Hit the like button. Going to get back to doing these more consistently. Shout out to my partners at Phemex. So if you use the link below, right now you are entitled to up to, I think, a $6,000 bonus. Obviously, that depends on how much you deposit. One of the reasons for that is obviously it's not just a $6,000 bonus if you sign up to the exchange. And actually, the link is on the screen. I just saw that. So tradephemex.com. Because then people would abuse that, right? People abuse bonus structures all the time, regardless. Like an exchange might offer people, $50 just to sign on, and then people try to take that off, and then they complain that they can't withdraw that. And, for the most part, that's them giving you money towards, just consider it like credit towards your fees, right? Because fees in crypto are exorbitant compared to any other market. But Phemex has all of the alts that I've been trading. It's a very reliable exchange, and it has the fastest matching engine. So If you guys saw about 2 weeks ago, Nomad was talking about Binance having a faster matching engine than Bybit having a faster matching engine than Binance. And the truth is that Max actually left Bybit to create Phemex, and their matching engine is slightly faster than all of those. Anyhow, use the exchange you're comfortable using. I've used numerous exchanges throughout the course of my time in crypto, and I use them based on my feeling about the exchange, what they have to offer, if I trust them, et cetera, et cetera. And you have to do the exact same thing. Don't sign up to an exchange just because your favorite trader or your favorite influencer says so and because they trade there. All right? Do what you're comfortable doing. I think after FTX, we could see, how you could run into trouble by just following other people. All right. Formalities aside, as a reminder, none of this is financial advice, strictly for entertainment purposes only. Yeah, the NYSE broke down today. I didn't really get to look too much into that. Not sure what happened. Whether there was, I think there was some kind of halt that was triggered for, numerous companies, numerous listed pairs. I don't know the exact details, so I don't want to go into it. All right, so let me just say hi to everybody. I think we're good to go. Run SPX back. So yeah, this is going to be pretty casual, right? I haven't streamed in a while, so we know what happens. I kind of play catch up. I have a bunch of things that I have isolated. As you can see, I have this watch list right here. I have it's separated between main, stock, and bullpen. So stock are things that I'm currently looking at, and I have not got into position yet, with the exception of XRP. I've been in and out of a lot of alts for the last, it's been a couple weeks now, but I've been trying to hold on to positions with the intention of carrying multi-week swings, but I can't seem to get out of the habit of what has been really good for me, which is just hitting singles, base hits, trading level to level. There's been numerous times in the last week and a half where I have closed out trades at resistance, for example, at a level that I predetermined to be important, right? A significant contextual level, and then have actually bought back in at the level. So when conditions are really good, and the market is, ripping and sort of has that bullish energy behind it and that flow behind it, and we're not talking about, just something that's a rally here and there, but this past couple of weeks, there's been, market breadth has been good. The market has been moving up as a whole together. There's been sort of a rising tide. It hasn't been just, idiosyncratic flow here and there. As a whole, we've seen money come back into the market. It doesn't mean that it is. So a couple things. It's not, I would say pretty confidently that it's not money that is outside of the market. It's money that's already in the system. So money that was in stable coins. It was flows that were derived from positions, right, that already existed. So shorts closing out. I don't think that we're getting like this exogenous flow from, retail outside of markets coming back into crypto. I don't think we're there yet. To get that kind of flow, you need to have, ultimately the market has to put in really significant move. This move has been significant, but if you really zoom out, it's been significant to us because relatively speaking, the market has been has gotten its ass kicked, went through a period of really low volatility. So we're just measuring and framing things based on what has been the sort of norm just leading up to this. So we were starved for any kind of strong trend, strong counter trend because we've been moving down, and we got it. So, in our minds, this is very significant, but it doesn't really stand out in the big picture. And again, markets as a whole for the year, for this calendar year, are up. There's no more drag from last year. Have capital being redeployed. I said around the time last year, you're not going to see a whole lot of fresh positioning come into the market because it's the end of a calendar year. Besides some window dressing, there's really no reason or impetus to take on any more risk. So new year, new slate, and that's probably why you see a significant amount of fresh positioning redeploying in this market and in markets as a whole. Okay. Something else I want to touch on, just thoughts. I'm going to pay attention to the chat on and off, and I will gladly take questions, but I'm going to cover BTC. We're going to cover the S&P briefly because I think that's a really significant indicator that you have to focus on, even though, risk as a whole crypto has bounced quite significantly with respect to the S&P. I think it is, though, a good tailwind if we get, well, I'll save it for whenever I get to that chart. We talk about alts, talk about some of the setups I'm looking at. And yeah, we'll wrap it up. It won't keep you too long. I think I had a thought, but I lost it. But I'm having a lot of those moments lately because, yeah, new dad brain. All right, first things first, just some thoughts about BTC. Okay, so why the bullish bias? So just to cover some points that I covered in previous streams leading up to this. Just make sure my drawing tool is on. Okay, so this entire consolidation, something I pointed out numerous times, the POC is right down here around that. I think that was like 18.8 or 19.1 region. We actually have the tool right here. So right around 19.1, 19.2. This is the Bitcoin US dollar index. So if we're looking at Binance, it would be slightly different. I think it would be slightly lower. So the idea is that this low tested numerous times, ultimately failing, but most of the volume coming in at that structure. So most of the positioning exchanging hands there. So initially a significant amount of absorption. We had a breakdown, but we didn't have any kind of what ultimately I felt would have been, much more significant follow through after a break like this. We broke down to 15. Yeah, that's a significant drop, actually, if you're looking at in percentage terms. But the market stalled out below there. And similar to lower time frame setups, setups you might take in a 5-minute chart, an hourly chart, a 4-hour chart, a structure like this, a consolidation like this kind of loss, if that doesn't lead to continuation, the reacceptance back within that structure, we just start treating it like we're initially going to be targeting the midpoint of that structure and the high of that range. And I've said numerous times before, if you have a structure like this, okay, a breakdown like this and then a move back up is easier than a breakdown and continuation, right? So so let me rephrase that. If we're talking about the market coming up here, it's almost easier for it to do that after it's broken these lows and then reaccept it back within the range. The same thing can be said with, let's say we're stuck in a consolidation and ultimately the market coming back down here. So it would be easier for the market to do that if it took out these highs first and then reaccept it back within that range. And that's for a few reasons. If we just think about these lows right here, major contention down here, right? Tested numerous times, a bunch of fresh positioning opened up there. Obviously, plenty of people thinking that this is going to be the bottom. So you have a bunch of longs opened up there. The breakdown stops out a bunch of those longs. So you've cleaned out a ton of selling pressure that existed in the market that was sort of baked in at that point, right? So immediately, if those sellers are out of the market, any move counter trend, so back in the opposite direction after they've been taken out, you could just assume there's less sellers in the way now, right? The market is less heavy. So this is why the concept, sometimes the market needs to sell off before it can move higher. So we take out those sellers. And then, of course, when we break down, we break these lows, we bring in fresh positioning, right, in the direction of that move. So we bring in fresh shorts. So now when we bring in fresh shorts, obviously, if they're leaning on this as being the most significant contextual level on the chart for them getting involved, their invalidation is going to be placed somewhere within this region, right? It'd be pretty stupid for them to place their invalidation all the way up here at structure. It'd be better off to place some kind of, hyper tight stop that would be contingent on this being sort of a very impulsive move out that would continue immediately without throwing back. So that means that there's plenty of buy pressure baked into this level as well. So you've cleaned out some of the sell pressure. You've added a bunch of fresh buying pressure in this region. So accepting back in here just makes that move. There's a lot less in the way of it. That was a really simple concept. So this is not, something I want to kind of continue to go on about. It's pretty obvious why that happens, right? So you clear out some sell pressure, you add some fresh buy pressure. So reaccepting back within the range, the move is not as difficult than if it was approaching it from a distance, right? And you're looking at this as one large sticky area. All right, so we reaccepted back within this range, retook this pivot. So I I said during, I can't really remember, right? Because again, this is going back to December now, that the market has no reason to float back up to this high. If this breakdown, right, was as significant as we were making it, right? So multi-month consolidation, right? If you're looking at a consolidation like that, you don't want to fade the first leg. And sure enough, you should often see that there's at least from high to low that you get that kind of one-to-one measured move follow through. So instead, big breakdown, very long consolidation, smaller breakdown, right? This is your retest. If this is going to do its job, right, and if this market is as heavy as a lot of people would have put, then this throwback, right, that should be the only real throwback. There should be a ton of selling pressure coming into this. You should have, imagine if you have longed this region thinking it was the bottom. If you're coming back up to that level, a lot of people are going to assume that this is a good area to get flat and possibly reevaluate. So it should have done its job right here. There's no reason why the market should have really cooled down and been able to float back up to that level. So a lot of times we say, or I'll say, if we have a major rejection, it should do its job the first time around. It's kind of like if you're looking at single prints on a TPO chart, not singles, but excess. Let's say that this is excess at a high, right? This is clearly showing that the market wasn't able to spend much time in a region, wasn't accepted in a region, wasn't very accommodative of two-way trade. That is the first instance. So let's say that a couple days pass by and suddenly the market is able to spend time here. Okay, so that seller or those sellers are no longer as active as they were prior. So the same kind of idea, these things that we apply from TPO and just from, lower time frame practices also applies to the higher time frame. If this was that serious of a rejection, if this was that serious of a supply zone, there's no real reason why we should be able to come back up here and hang out here, right? So previously unaccepted, now accepted. So this whole region, this sort of floor around 18, specifically that is 18.5, 18.6, up to 19, what was that, 19.2. That zone was the most significant zone on the chart to overtake. Again, multi-month point of control. So multi-month point of control here. Most amount of positioning and volume transacted. Most significant contextual level on the chart. So we re-accepted back within that range. So there's reason enough in that to be bullish, at least to a high, right? So this is a pretty one-sided move. Accepting back within a range, back within a move like that, you're at least going to look at that level being covered or back to the origin of that. So that's kind of right around mid-range. And more often than not, you see that when you re-accept within a range, you get mid-range as a good area to possibly manage a trade, take some off, and then you have ultimately a lot of the times you see the high revisited as well. Now, obviously, this is BTC, so it's more costly to move. It's going to be slower. It could do something along the lines of this, chop around. But more often than not, what we see is when we have a range carved out like this, if this didn't lead to massive expansion to the downside, and we're back within that range, we're just going to have kind of the slow activity that we had on the way down, but now on the way back up. That is at least what has happened historically, and it's what we see across most pairs in this market and pairs in other markets as well. It's a big carve out, right? The best way I could put it is if we're looking at this profile where most of that volume was done and where price has been accepted previously, just imagine that as some kind of like topographical indentation. And the edges, this is the best I could come up with. The edges are your range extremes. All right, so if we have enough energy to make it over the edge of that, what do? We settle in the middle at some point. And a lot of the times this has enough, what is that, inertia, momentum, to take us back to the other side, at least for one go. So inside, midpoint, high, ultimately, but we're doing a little bit of stalling here, so we'll evaluate that in a second. So high time frame wise, re-accepted back within a range. Another thing to focus on, and this is historically very significant. Again, limited sample size, right? Very limited sample size. We're talking about just over a decade, and I wouldn't even say the entirety of that decade is relevant, because I think that the more relevant information is recent information. The more relevant information with BTC, I think, is the period in which it became hyper correlated with legacy. When it started trading more like a tech stock, when it started trading more like, equity beta. All right. Because I don't think this is going to change. I don't think it's going to go back. I think it's going to be either, capturing more upside or capturing more downside. And maybe we get to a point where it captures less downside. And, you have that at structural lows when it's no longer selling off and risk bottoms before everything else. But we reclaimed the 200-day moving average. So this is a significant line in the sand. It's dynamic, right, for trend followers. Trend followers, higher time frame traders, people that are position traders, not nearly as active as everyone else, right? There's only a few signals that they operate on behalf of, and this is one of them, okay? Slower moving, right? Much slower moving, much more gradual change, but nevertheless, it implies that a significant change has occurred, right? We have been in a very strong downtrend for a long period of time. It's the first time where the market, this is really beginning to flatten out. Okay, so this doesn't necessarily mean it's turning up yet, but clearly momentum and the trend to the downside has at least begun to take a breather, right? Or in this case, I think it's stopped. I think we've bottomed. My belief is still what I said last year, which was we're going to bottom Q4 of last year, and we see Q2 I said we start moving upward and we can start laughing at TradFi again. We'll see. I'm not going to hang on that. But this kind of change, again, this kind of trend following signal, very significant in legacy markets. So if we look at the S&P, we're going to look at that in a second a little bit more. Recapturing the 200-day is a trend follower's green light. And if you look at trend followers, CTAs, they swing around a significant amount of capital. So what you do is you just green light a lot of structural flows, all right, that act on behalf of this kind of systematic signal. So they're systematic traders, okay? It's not like they're taking context into consideration. It's not like they are, thinking about funding or anything like that. All right. It's a pure systematic trend following tool, and it just brings in a lot more buyers. Okay. And it's not your buyer that's buying on a 5-minute time frame. It is someone that's going to be less price sensitive. So if we're sitting now a good $2,000 above it, it doesn't necessarily mean that they're going to wait for some kind of major pullback, right? The point is they're less price sensitive. They're not sensitive to the day-to-day things that a lower time frame trader is. And for them, it might mean buying with a TWAP. It might mean buying based on some kind of, percent pullback, buying along VWAP. But the point is that for a lot of larger traders, this is a signal that's acted on. And the idea is you just added that much more buy pressure to the market. So for structural reasons, for trend reasons, for momentum reasons, the flows are, it has made sense to be long bias above this level. All right. A couple things to point out before I change it up, and we'll go to low time frames and look at the ES. And when we look at the ES, we don't really have any calendar. We have PC at the end of the week, and that is significant. That's very significant. But what was I going to say? As far as the extent of this move, though, if we look at this daily period right here, 1, 2, 3, 4, 5, 6, 7 green candles, not historically off the charts, but if we look at momentum tools like the RSI, if you look at standard deviation tools like the Fisher, so Fisher Transform is one of them. So if you go to indicators and put on Fisher, you'll see RSI is going to show you similar feedback. So there might be, I don't know if you could say there's what would be defined as like multi-collinearity between those signals. But ultimately, if we put this on, which is a really good tool to identify moves that stand out from the norm, put that on Fisher and we put this on RSI, and we just kind of back out of this. We are pretty off the charts. Off the charts with the Fisher. So you'd have to go back to 2017 on the run up. And then when it comes to the RSI, off the charts until we go back to January of 2021, and then we go back to 2019. That's on the daily. Now, RSI being overbought, RSI being oversold, these are, you shouldn't reflexively look to buy or sell based on that. The idea is that a lot of people exercise is that if RSI is overbought, you should start looking to sell. And if RSI is oversold, you should start looking to buy. The first time around, you should consider it a warning shot. But what you should mostly consider is that that's showing you that the trend is really strong. It's a momentum tool, right? In a strong trend, I don't go too much into RSI. I think it's a really useful tool for trend following, honestly. Plenty of people have utilized it for lower time frame trading. CBS is a guy who's, his bread and butter, I think, has been RSI. He's a great trader. For trends, though, ultimately, when a new trend begins, you will always have RSI divergences because unless the market continues up at an accelerating rate, which would be, a nonlinear kind of rate of change, the RSI is always going to have a cool-off period. Unless you had each candle into infinity continue to be larger and, have a, be bigger than the prior, you'll always have it cool off. But ultimately, this is a sign to pay attention, right? It's a sign to pay attention. We've been sitting up here for a while now. Another reason to pay attention and not, I think you want to, I don't think you want to get too aggressive. I think what you have to remember is, and I tweeted this, let's just go back to this tweet and get the exact thing I wrote. And then we'll get to the low time frames. Sorry, a lot of catching up in this stream. Okay. Okay, what did I say? I say, make sure you don't take what is possibly a good sign for the longer term trend. So retaking something like the 200-day for something that is continuously applicable to short-term trades. What I mean by that is, yes, this is a really good sign, big picture, all right? But it doesn't mean that all your trades for the next week, 2 weeks are going to be long, right? Or the market's just going to continue upward and everything's going to be perfect on the long side of things. This is good for the high time frame trend, right? So again, 200-day, zooming out. This has marked the bottom every time. Now, you have to remember, when we go back to something like this, that it marked the bottom, but it didn't mean that we didn't revisit the level, right? So mark the bottom. Yes, this is at the bottom, but we came back down. You could see back down here when BTC broke out in 2019, mark the bottom, but ultimately we came back down to that level. And that was, that was kind of obviously a black swan. But we've done a lot of losing and reclaiming of that 200-day. It's been good for the long-term trend, but it's not always actionable intraday, right? So my point is, you still have to be mindful that there's going to be significant pullbacks. Now, where is the pullback going to occur is different than, knowing where it's going to occur and knowing that one's ultimately coming are two different things. I say this, people ask, is it going to pull back? Is it going to pull back at this level? No, I'm not putting it on dark mode, dude. In general, when someone comes on a stream where there are 100 people watching, if one person has any input and wants to change something, it's probably not going to change, right? But what I said was you could get a pullback at 25. That's a 15% pullback, and a pullback from here that's a 15% pullback. We're going to have big pullbacks in the trend, but there's a big difference between where that happens, right? For people that are trying to get involved long term. What I do think, though, is if you look at this level across all time frames that are significant on the high time frame, yeah, massive move, engulfing move on the monthly, right? So engulfing move on the monthly, again, this has marked significant turning points in the high time frame trend, engulfing moves. But let's just add some levels here. Closing levels for this. It's not an inside month, but where things are really balanced. Do the same for the weekly. Highest weekly close. Do the same for the daily. Highest daily close, basically the same as the weekly. The idea is, I'll take this and place it up here now. There's a lot of stickiness right above us, okay? A lot of stickiness. With alts, I'd be more inclined to, honestly, when they put in a really strong move and they're consolidating briefly against resistance, I'd be more inclined to buy something with an alt because, again, they're a little bit easier to move. With BTC, and I don't mean me personally moving them, I just mean that they're a little bit more reflexive. With BTC at a level like this, I think you do want to be cautious. All right. Now, there's a couple things that stand out. If we look at the 4-hour chart, for example, and I think this is going to apply to alts as well. The yearly VWAP, we'll just add this. So it's this quarter right now. We're at that 1 to 2 standard deviation band. It's been one-sided from the yearly open. So one-sided from the yearly open. That leaves us with a yearly open that has really no probe below. And then inside this structure, you have some pretty obvious fair value gaps. So if we're just going to indicate where the gaps are still, right there. You know, I mean, this is not gap per se based on single prints and some kind of 30-minute chart, but you could see that the market has put in a really strong move, consolidated, smaller move. We're within a briefer consolidation now. I think you might get something like this. The last spike up, maybe we get a test of 25 before a larger pullback. And then honestly, I do think that I don't think this is the move that's going to leave us behind. Now, I'll change my mind if we're above 25 and we're finding support up there and things look different. But I think there is a good reason to assume that the market is starting to get a little bit long in the tooth up here. Funding rates are not crazy. We're not seeing anything that's, you know, astronomical or egregious in terms of annualized funding rates in alt yet. We still have, you know, consistent negative prints in and out of positive prints. It's not like it's completely one-sided yet. But I just think that we're getting to the point where we're getting a little overextended. I don't think that this is going to be something that just continues to rip up. I don't see the fuel for it, honestly. If we look at open interest, I don't see the market getting, really aggressively taking the other side of this. I see it getting a little bit more obvious that the bottom is in, and that the long side of things for, I don't know how long, is as far as high time frame trend. I think the trend being, how do I put this without sounding misleading? Because I don't want to say, I think the bottom's in. Okay, I've said that multiple times, so I'll just lean on that more. I think the bottom's in, and that people are going to be a lot more aggressive about the long side of things now. So for this, I think you might get one more spike up, but honestly, I can't see a world in which we don't come back down and test this yearly VWAP, and don't come back down and test these gaps. So those gaps are between 21.5 and 22.7, and then we have a gap from 20,500. It's not necessarily a gap, but that 19.9 region is VWAP. I think we fill these out. That yearly open, this is going to be pretty troublesome for anyone who's not a price action trader. So the yearly open, so we're working with a couple things right now. The strong argument for the bulls, again, remember, I guess the thing to really lean on is there is a really strong argument right now that the market has bottomed. Right? Risk is always going to bottom before, BTC is going to bottom before the stock market, right? That's risk is going to bottom before, like higher beta is going to bottom before lower beta. All right. Because at some point you just literally crush everyone that's held risk and flatten that out. All right. So the market is back above the 200-day. Don't want to lose myself. It's back above the 200-day. As a reminder, that for me, that's a really good sign that we're beginning to bottom, but key is beginning. It doesn't mean that the market does not do this, right? That can very likely, that can very easily happen. There's no rule that says that can happen. I think that it's likely to happen that the market fills out this region. What stands out to a lot of price action traders is this anomaly. It's I'll take these levels off the chart. I'm just going to remove everything. It's the monthly open. It's the yearly open and the monthly open, right? Same thing because it's January. There's really no shadow wick. I mean, it's like a $40 wick. 40, maybe $50 wick. Let's see. The open is 16,530. The low is 16,491. All right. So what's that? 39 points. that doesn't count. That's not a move below the range. So the problem is we're working with a 200-day that's telling us that historically this means we're bottoming, right? At least the trend is going to shift for the mid to high time frame. But another high time frame unbroken pattern is that we don't have cases where monthly opens like this don't get revisited. And for those of you that have been following for a long time, I've been using this for the daily and the 4 hour as well. So, weekly, daily, and 4 hour. I think anything below that, if you're looking at a TPO chart, a lot of times that's going to be a poor low. But the same thing that we're talking about for the monthly and the yearly is what you'll see me post about a lot on the daily. If we have a case where the market was one-sided off an open, so one-sided off the open, meaning we opened, we didn't have any kind of range below, we just moved one-sidedly in one direction. More often than not, the market comes back down to clean this up, which means does something like that. So we have conflicting signals. Now, that doesn't mean that this can't be the anomaly that leaves that behind, and it's the case where we have a $39 wick, and wow, maybe we could come back to that well into the future. We had that happen all the way back here, where it was a very small move below. So it was like, in this case, it was maybe 100 or 200 points. But we spent a lot of time away from it before ultimately coming back to it. Now, obviously, this was an anomaly. This was the COVID crash. But we still came back down to that level. Now, coming back down to that level doesn't mean that we make new lows. So, again, just something to point out. It's not something that says short right here. But ultimately, for the daily and the weekly, at least for myself, this is a target that I consider. If a trade starts setting up where we start showing, if it's a Monday, right? A lot of times we revisit Monday open, so weekly closes, weekly open. If it's the case, I've said this many times before, where if we have the low and the open very close to each other, and we've had an impulsive move away. If we start seeing a setup occur, let's say that here's the Monday open. Okay, market opened here, put in a small low, and we have a very close low and open. Impulsively moved away from that, and then we get some kind of setup. Let's say we consolidate, swing fail, and then start having some kind of backside retest. A lot of times this is going to be my target. Same thing can be said with the opposite direction. So if we have like Monday open, and then we have Monday's high just marginally above that, and then we impulsively move away from that, and then we have some kind of setup, maybe a swing failure, and then we're putting structure back in the opposite direction. A lot of times it's going to tag that getting cleaned up, right? So taking the other side of the open. So it's kind of the same logic right now with this monthly and yearly open. Yeah, we did the same thing on the downside in June. So those are just high time frame thoughts. Give me 1 second because I have to take a piss real quick, and I will be right back, and we'll get right back into it. All right, we're back. Okay. All right. So that was the high time frame. Just some things to consider. I want to look at the ES because this is in a really significant. It's in a really significant area, and I think it's a significant area for our market as well. So the ES the 200-day, it's the same idea for BTC, and it's a lot more significant in equities. It's a lot more significant in equity index futures for the S&P, more than anything else, I would say. So this is a line in the sand for a lot of systematic trend followers. Now you have CTAs getting involved based on a lot of other trend signals as well, but this is probably one of the strongest. This 200-day, you can see we flirted with it multiple times, also coincides with this diagonal resistance that's been kind of capping us off now since the beginning of last year. All right. So diagonal, meaning that you'll break it through sideways movement alone. Okay. So a diagonal trend line resistance or support, you're going to break by going sideways. Okay. So this is just showing kind of rate of change over time. But the 200-day is basically right around the same region. Now you can see we flirted with it. We tapped through it. But we haven't had any real significant presence through it. So a significant close and period where we'll say that we start building value and accepting above this level through these two zones. So through that diagonal and through that 200. So a breakthrough and then something like, you can see this box. This box is actually... This is based on the monthly. So if you go all the way back to May, you can see that we haven't really had a significant close outside of that May candle. So we've had one significant close. We reaccepted back within. The majority of the last year has been spent within this range. All right. So I think that based on us kind of hanging out around the high, so we'd have to first, let me just establish the level first. If we start accepting above this weekly high and building structure, and that's right around 4070, then we're consolidating against that monthly region. We're through that diagonal resistance, and then we're above the 200-day. I think that at that point, it'd be really stupid to remain bearish, at least in the short to midterm. So acceptance above, that was what, 40, that high right there, it's right around 4070. Acceptance above that, putting in structure above there, you have this kind of bottoming structure that's taken place, unable to make a new low, didn't even revisit that low, and now you're consolidating against that monthly highest close. If we could do that, by the end of this month and we get some action above there, that green lights, more importantly, that green lights a lot of trend following systems, right? Just based on that 200-day alone. I don't know the exact level. That's the level that I'm looking at. But the idea is, again, that's a very significant amount of flows that come into the market where they're just buying based on those trend signals. And it doesn't make sense at that point, if you're bringing in the largest participants, same with BTC, and you're a small fish, like you want to be going up, you want to be going with the current, right? You don't want to be trying to swim upstream. You don't want to be trying to piss against the wind. You don't want to be trying to go against what are the largest, some of the largest flows in the market. I think if the S&P breaks above there and we get some kind of move through that level that's really clean, because right now it's, it's through. If you look at it now, it looks like it's retesting it. But with this, you've had so much chop around this level previously that you want to see a really decisive move through. And you want to be able to see that it holds its floor and it's not losing its legs right away. If we get that, I think you have like a period of maybe 2 to 3 months of really strong action across all markets. So with respect to crypto, which is obviously bottomed first, and then legacy as well. A dollar something, and then I swear I'll get down to the lower time frames and then get to alts. The dollar is something still to focus on. This level between, I put it right around 100 and all the way up to 103. It's reasonable to expect this might be an area where dollar finds support. Just based on historically over this was almost a decade, this being a supply zone and a pretty significant resistance. It's obviously a lot more at play with the dollar. It's a basket of currencies, right? It's not like a shit coin. But if the dollar does begin to find its footing and we find support there and we see a strong bid again and a strong dollar, that changes the story. And we've seen an inverse relationship with the dollar and risk It hasn't always been that way for the last, couple decades. It hasn't been the case that there's been an inverse relationship between the dollar and risk, and the dollar and the S&P. There's been plenty of regimes where the dollar's been strong and the S&P's been strong, and it's a little bit different right now. But again, we have to go with the more recent information, which I think is a little bit more pertinent. All right. So as far as alts go, so first things first, BTC. Just line this up real quick. So again, high time frame resistance, we're closer to it than we are to support. Right. The only area where I could say that might be high time frame support that is local is if we come back down and test this pivot right here, right around 21,000, was at 365. I do think that before I get into alts, I will just say this across the board. I do think that we're going to see returns back down to the yearly VWAP. Again, so that's anchored VWAP. All markets have been pretty one-sided off of the yearly open. The reason I highlight this level right here is because we have seen cases, and I've said many times before, when you have a range, you break down under that range, and we reaccept the most significant sign of strength is actually when we break above and we're able to retest and rehold that prior resistance now as support. So I'm not going to write it off. I don't think in this environment you want to write off any level as being insignificant. You're going to see a lot more aggressiveness at any level that might be perceived as support, at least initially. So what I would say is, if you're what's happened recently is with the market gaining momentum, I stretch my time frames a little bit more, and I'm willing to hold things a little bit longer. I'm not as focused on, those brief intraday moves. I'm willing to let things go a little bit more. And I'm also, I'm not taking as many low time frame trades as I normally would, but they're definitely they're not a priority. Like if alts are running, I'm not focused on BTC as much, right? Alts trading very technically, liquid alts. Doesn't make sense to be hyper-focused on BTC. What I will say is that the levels like this, I think that if you are a scalper, you still get those first test reactions at those levels. So if let's say you're still scalping, my point is I'm not still focused on like a 3-5 minute chart, just focused on the intraday. I am more zoomed out because I think there has been significant reason to be. But if that's your bread and butter, if you want to just scalp, look at these first retests of levels that, previously were significant on the way back down. They will more than likely, at least briefly, act as support. So if you're looking for like a 100-point, 150-point move and you're still scalping, just keep that in mind. Now, for at least intraday, I covered the inefficiencies here, sort of these gaps and the yearly VWAP. And if we start losing that, right, if we start breaking back down towards VWAP, this level better hold as support. So that sort of 19K region, prior floor. I mean, if you start losing that, then just target the yearly open right there, and that's probably your trade. As far as intraday, consolidations on average are 3 to 4 days. We've seen that in alts. There's a pretty easy setup to take that's happening across the board with alts. I'll get into that in a second. It involves 3 to 4 day consolidations with a break of the high. BTC still within, let me just change the ink, still within the value, or still within value from this high. So we had 2 days, yesterday and the day prior, not inside day from a range standpoint, but inside value. Accepted briefly out, didn't get the full move back up to the high value of that initial high, reaccepted back within value. This is kind of a Dalton setup right here. So it's not, you don't get an overnight gap. We opened up within value, so it's not the same Dalton as when you open up outside of value. But again, this 24-hour market doesn't make that much of a difference anyway. It's an accepted area. So we rotate towards the high, don't get the full move up, reaccept back within value, and trade back down to the low of yesterday's value area low. We're just back within value. So it's not like a trade that really stands out locally. I think that we haven't had any kind of test of these lows yet. We have marginally higher lows right here. If you do get something where we break below yesterday's value again, so if we retest today's low and we get some kind of break below, I think you could ultimately just target, these lows So right around 22.5. So it's like a 200-point move. 22.5 and then 22.3. It's looking like things are drying a little bit up here as far as momentum goes. The reacceptance back outside, though, I think you could target this high. I'd have a hard time believing that. One, I have a hard time believing that the high is necessarily in. I think we get a pullback to some degree, but I think that we're due for some kind of exhaustive last push up before a major correction, before maybe a multi-week correction. But if we are right now back within the last 2-day composite, and after reaccepting back within there, we're able to trade back above, and we'll say something like, so where most of that absorption came in, this sort of underside retest, right around 23. Because if you look at actually, if you go back to the high, so it was right around the high, what was this? The high of today. It's kind of an incomplete auction. So it's not like we zeroed out. And these are higher increment candles. So it's a 15-minute higher aggregation. But it didn't really thin out up here. So a lot of times when you see the market has completed an auction, rotates towards a high, you get that kind of structure that might zero out towards a high or at least really thin up. And that means that as you're moving up, you know, the bid is no longer willing to follow and absorb any selling, or rather buy passively. This might be market makers. This might be actual participants. But this time, when the market moved up, it still provided a bid. You know, you could see we absorbed 7.3 million contracts right there. So that, to me, kind of still leaves that as a target. And I think that this local pivot, so one sec. Let me just turn off VWAP because it's fucking shit up. Ooh, excuse me. I watch my language now that I have a child. This local pivot right here. So we're back within yesterday's value. Good amount of soak so far. Market's kind of pinned between, what was that, 22.95 and just chopping right here. It's clean enough that if we get a move back above 23, I think you can ultimately target these highs. This doesn't look like a high to me that's put in and that's it. So some kind of breakthrough here, back above the last 2-day composite. And again, if you put on profiles, be a little clearer. Here's 2-day composite. We're back within there right now. What the hell is that about? If we're back above 23, so that little pivot right there, we're back above today's value at that point. I think that you're looking at that move up to the high. I mean, overall, the market is kind of drifting. It has a slight positive drift. It is still within that first day, so it is sideways. But again, I'm kind of biased in the sense that I don't think that after this kind of move, we don't get that kind of chase off, blow off top. We don't have, it's not like we have poor highs unless today is a poor high. So yeah, you have a little bit more reason to be biased towards this high still, at least towards the high of that first day's value, which is right around 23, 250, 23.3. And if we look at just derivatives right now, you're not going to see a whole lot of negative funding with BTC. What you will see that is indicative of absorption is sort of just looking at the tail end of this move, right? On that move down, open interest going up, and you'll see that predictive funding will come off a little bit, and it'll go more towards neutral, more towards baseline. So it's not the case that you don't even really need to look at future CVD. You could just look at predictive funding a lot of times. It's not really the case that you need to see if this is if we're going all the way back, let's say back here, and you see these periods of negative predictive funding. It's not the case where you necessarily need to see it go red before you've absorbed a significant amount of sellers and you could squeeze up again. A lot of times it'll even be the case that you've had a significant amount of absorption. If, let's say, the market has moved sideways, right? And this is just coming off. And as that's coming off, you have open interest slightly drifting up. Because the way that comes off is you have long selling, right, to avoid the funding. and you have shorts opening to get paid. So that closing of that gap is due to that sell pressure. And if the market is, it's one thing though, if the market has sellers come in that are new business, because that's fresh positioning, and that is something that actually for structural reasons will give you a squeeze. But still, even if it's not, right, if it's just the funding coming off and the market's not moving further down, it still means that the bid is absorbing that sell pressure. Because again, if selling comes into the market, and we've seen that over a period of time, enough selling has come in to flatten funding. So here's your funding indicator, and this is coming down. But the price has been relatively flat. It means that the stickiness, or rather the path of least resistance, is clearly not down, at least in the short term. As far as, so that's BTC. It's not like a whole lot stands out. I mean, this move is pretty extended. I don't want to be like getting too aggressive with BTC up here, but I do think there are some intraday plays. Again, these areas stand out, these sort of fair value gaps. You have single prints down here right around 22.2. Another set of singles right around 21.8. If the market wicks into here, this is probably a first response region. So being that we didn't take this low, just anticipate that this doesn't go down without a fight. Let's say it did roll over ultimately. Odds are you wick out of these singles. So you get some kind of selling into that level that gets trapped, kind of sets you up with that mousetrap setup, sort of like this, where you have a low broken and you have some asshole selling, 10 million contracts at the, almost at the Pico low. So alts, though, for me are a lot more interesting right now, and I think for everybody. If you can find liquid pairs, you don't even have to put too much size on them. They're just running across the board. Now, right now, the thing about alts is they're, again, like BTC, they're pretty extended. So if we just go through, so this is a weekly chart, and then we'll put on the daily. Zoom out a little bit. Just run through sort of the gamut of alts. So this is Ape. Now, Ape, if we look at, this is one of mine that I'm stalking right now. I was going to pull the trigger just a second ago, but I think I'd rather see this put in a little bit more development, because if we look at this on the weekly, here's that weekly range we were within, right? We've had a reclaim of that weekly structure, had a bullish move through right now, kind of hit every target that you would anticipate taking if you were trading on the daily, or even down to a 4-hour structure. If you were just looking at some kind of brief momentum trade, this is a pretty sticky area right here, right? So this area between 572 and up to 586, you could see that that's a multi-week period where we couldn't really close through there. Market came, retested it. You extend all the way back, and you'll see that that level goes back to this low right here, right? So I don't want to just act like this is just going to rip right through. I'd rather get something that broke above, retested, and then treated this as support for that move up to 721. This is something that I am focused on, though. Ape has been trading with negative funding for a long period of time. Again, it's a lot of hedging. It is a lot of hedging for structural reasons with respect to Ape, and for their staking. But it still means that with all that hedging coming in, so if you look at Ape, it's a great example of what I was just saying. Ape has positive drift, right? But funding was getting increasingly negative along the structure. So what that means is there's more selling coming in. Price is able to drift slightly higher, though. So there's a lot of stickiness below. And you can imagine that at some point this might not necessarily be a good sign, though, because people are going to still be thinking it's still time to buy dips when we're really extended off of the lows. And you're going to get people that are passively buying, thinking, oh, I'm getting filled with a limit order. This is smarter. The trend is your friend. And then they're going to be the ones that get smoked. So you'll see a case where there'll be absorption. And this is why you should focus on like anchored VWAPs and POCs, because a ton of absorption will happen here. It'll be a passive absorber, and it'll absolutely puke the same way that any kind of, large area of market buying clustered in. But Ape is something that I'm looking at. Aptos, this has the potential to be, if we're going to continue to trend for weeks, this has the potential to be something like an Axie, right? We've seen many times before where it looks like, oh, this is the one that's been great for the last week. Let's chill out now. And then it turns out that this runs for the next couple months. Either way, the most bullish pair, I always want to buy the first test. Like, even if this is done, this has not come back down to test this level. This is a, obviously a very significant level in terms of price history, right? One of the few levels that we have. It's not like it's significant for any major reason other than from a structural standpoint, it's fresh. So no real tested on the way up. You could bet your ass that on the way back down, people are going to be buying that 975 level. Does it mean that is where the trend goes back up? No, but I do think that you have a good scalp opportunity there. If we start trading back within the structure, you're looking at revisiting, the areas of major, what word am I going to use? I don't know why. I could just say consolidation. But the last time I was thinking of a consolidation during one of the streams, I was thinking of this word and it just didn't come to my tongue. Like one of these really congested areas, right? Just fucking stick to the simple words, dude. But if we start breaking back below this high, you just target this low. Where's the market need to go to get more people involved? It's probably that low. And then, yeah, if markets as a whole are cooling off, the best areas to buy or to probably look for activity if we start breaking below that 975 region or this low down here, this kind of gap, and then ultimately the retest of this key level. And that's a key level on the weekly, right? So you could still see the weekly chart to the left. That's right around 519. So figure that 5 handle, that 519 area. BCH, strong, right? Strong in the sense that we broke outside of this running diagonal that we had, reclaimed weekly market structure, had this daily flip within right around the midpoint. But I don't want to be overly aggressive at what is ultimately we're looking at range highs, right? So you're going to see that this is kind of a common thread with alts. Doge is not doing anything spectacular. We just have this daily, this prior daily high holding as support now. It's a kind of one-sided move on the way down. Doge will grind, though. You got to remember, Doge is really reflexive when there's retail here, not when there's retail that's already been here. So Doge is very big. It's heavy. It's hard to move, similar to BTC and similar to ETH. But I'm always keeping an eye on Doge just to get an idea of like if there is any kind of major animal spirits. Filecoin. This setup to me is interesting. So this is, again, it might be poor timing if it could always be poor timing, right? If BTC corrects, but multi-week lows. So high time frame market structure. You look at the daily, right? Consolidated right under that level, had the breakdown, and this is kind of the most bullish activity you could have. You have a breakdown, complete reversal, break back through this level, and now we're back above that weekly structure. So for this, ultimately what you want to see is that sort of, instead we'll say it's right around 475. I think 475, you want to see 475 hold at a maximum or at a minimum. A lot of pairs have done something like this, put an extended move after a brief consolidation and then continue to sort of parabolically blow off. So that's why I'm focused on this, even though it's kind of like, if you look at this again, this is a daily chart. We've had this indecisive sort of balanced candle breaking down now, but nothing that really says that the trend is lost. Like if you look at a lot of alts, even the ones that are at high time frame resistance, they still, if you look down at like the 1 hour, the 4 hour, the trends are still relatively intact. So a lot of times what you'll see is that they might look like they're really thinning out, like not building much structure, but the last structure that's left is literally a straight moonshot before you get the major correction. So instead of getting like a correction that just rolls over like this. So that's interesting because we're back within that weekly structure. It's really clean. Just to be clear, alts have offered some really easy setups. So really easy structural setups if you have the confidence to buy them, which is why like that mental part of trading is so important, especially in things that are really respectful of technical levels. So for example, Filecoin accepts back within this consolidation, same logic as any other consolidation we talk about, accepting back within value. If we move back to the high of the value, we trade back within, we're looking at retesting the low. So retest this low and find support. You don't have to buy that, but most alts are doing something like this, where they have 2 to 3 days of this. So let's just say that's 1, 2, 3. they're breaking down, trapping participants below that, anticipating that that's the roll, and then giving you the final leg up or the next leg up. Now, waiting for this, it's a big difference between waiting for this and trying that based on 1 day, 2 day, or the 3rd day, right? The longer the consolidation, and then with ultimately the reacceptance, the more likely it is that's going to have follow through, right? If you have a move that moved up like this, you had 3 days of consolidation, broke down, and that didn't lead to, a larger reversal of that positioning unwinding, well, then if you come and retest even within that structure, you're probably going to gun for those shorts. And it's very unlikely that you have markets just allowing shorts to get in like that and they don't punish them. So if you don't get a lucky entry, your entry is going to get retested. What has been actually a setup that you could take across the board, and it's kind of transpiring with Kava right now, is that multi-day consolidation. So again, very clean. All this stuff is very clean. So Kava, if we look at it on the weekly, under over, right? Next major area of congestion is right around 140 to 150. That leaves this gap. And with all alts, we've seen that for the most part, these gaps have just been covered. So that is a gap ahead of us. It's not a gap like there wasn't any kind of structure there. Like if you zoom in, there's going to be periods of consolidation. It's not like a single Prince gap on a 30-minute chart. But either way, one-sided move down, unchallenged positioning, right? It's not like there's much structure in there. When we've had that with alts, consolidation, leaving a gap behind like that, reaccepting within there after having that failed breakdown has just been a very easy trade back to the high of it. So if you're looking around right now and you see opportunities like that haven't been closed, just be mindful you might have beat everyone else to that opportunity, right? Because the market is just chasing, looking for the setups that still exist. So Kava was listed on Coinbase, right? Has this beautiful retest. I hate when people use the term beautiful for trading, but I just did. But does have this like textbook retest. And now, honestly, one thing that I've been doing has honestly been just longing breaks like this. So you have this roll. Maybe you don't want to buy the dip because you don't trust whether or not that's going to be the thing that nukes back through value. Because again, this is kind of the make or break level. That's what makes the level attractive, right? You can define your risk. Because if you're back within here, well, that's going to be pretty accommodative and you're probably going to rotate back down towards the low of that value, right? It was lows prior, breakdown, retest. Again, it's just the idea of carving back out the range pretty easily. So instead, you see that retest, and a lot of times you can get involved on the break of this high. So whether it's a daily close or you just see a sign of strength through that, and this is back on the daily over here. But if you look at the 4-hour chart, like you've had your sort of 4-hour swing failure, back within that range, pushing up to the high. Reasonably, I think you could get behind this position. I'm not giving anyone advice, but define your risk on that low. Like now there's no reason why it should be revisiting this low, right? So that's one that looks like it, still on the board. But a lot of other alts, like I said, their 4-hour trends might be intact. Like if you're looking at something like, for example, let me give you an example where it's structurally, it's at resistance. Sushi's kind of an example. Like that's high time frame weekly level. That was a pivot on the daily as well. One sec. I'll find a more sort of ugly setup. Okay. Here's a good example. Anchor, ANKR. We are right at what was a major floor on the weekly. Covered that gap like we were just pointing out with Kava, sort of same setup. So that Kava setup is basically this. If you look at Anchor, did the same thing. So look at this, and now look at Kava. Retest of that consolidation. But now it's run its course, right? It's at the next logical area of high time frame resistance. Like, it's not like a lot of things haven't blown through resistance, but it's reasonable to expect to be sticky here. But if you look down on like the 4-hour chart, like I said, these trends, because we're looking at a trending market the last couple of weeks, not just these, one-sided moves up that have retraced. The market's been putting in strong trends. If you look at something like the 20 period, which is a good line in the sand, look at the 20. If you look at where we are in terms of the, just like the yearly VWAP, holding the outer band of that, the trend is really strong and it's still intact. So it doesn't make sense to bet against the trend right now because those trends are intact. But it does make sense to, instead of thinking going long to short, at least thinking of going long to flat, right? Or, hey, if we're at resistance, this is an area where I either want to manage a trade. Manage might mean raise your stops, place a trailing stop. This might mean that I just literally keep this on the screen until we get something happening. And then if we break above, I want to add to this, just manage a position. It's pretty straightforward. But a lot of alts right now are kind of doing that. So AVAX back above that weekly level, but no, there is no but with AVAX. I should have added that to my other watch list. Hold on one second. I'm just going to run through them pretty quickly. Well, I'll run through the ones actually that I'm interested in. How about that? So we went through Doge, File, FTM. This is one that put in the move, the move throughout the entirety of that structure has been covered. So back within that weekly range, already at the high. It's above that, right? It's above that range high, but this is like the most obvious level to take profit and at least start managing position and getting flat. If you've been in this move, it's been one-sided all the way up. It's definitely overbought up here. And this, with these two structures back to back, so a high, what the fuck? Excuse me. So a high, a pullback, and then another high in the making. A look back period in an RSI is like 14 or 12. You'll probably see a divergence here if you looked at RSI. So you have a, high, but now you have a lower high. So a reason enough to start paying attention to maybe an area to take profit, or at least, I don't want to say actually short. It would be the other way around. If you want to short or at least look to take profit, I wouldn't want to hit the red button anytime soon to open up anything aiming down. I would rather see significant signs of failure than try to top tick these things. The reason why these are moving like this right now is because people are in disbelief. People are complaining about the timeline right now. Like everyone on the timeline is like either really bearish and pissed or really euphoric, and it makes sense. Markets punished people for a long time. It's finally given them a little bit of relief. And because the trend has been one way for a long period of time, due to recency bias, people are selling it like, you should sell every rally, and it's just running people over that are doing that. So you'd rather see some kind of failure. And at this point, I'd rather see kind of multi-week failure than just daily failure to short things. Kava moving up. Magic is something that I am looking at. Not much price history for this, but if the market's going to continue to move, something like this, it's the same as like OP. It's the same as Aptos as well. There's really no history. When you break above the only high, you tell everybody that ever sold that they were wrong. If you were involved here and you sold this, and now we're back here, you're thinking, damn, I should have just held on. I could have been away from that period of time. I sold too early. That's kind of the same logic right now for Magic. You have that initial listing sort of pump and then retracement, and then the market's always got to go through this period of sideways reaccumulation. I said this early in the last bull market with the soul pairs. People asking about something that got listed and it's up here, and I'm saying, no, it's got to do something like this. Like you'll never see that a month into a listing that the continuation move off of that is going to be sustainable. Much rather have something that does this, that bulls out. So this is something that I am going to be looking at. I don't know if it's not something I'm buying right here, but if we get a pullback across the board and we see signs of strength still, I'm going to be looking at something like this because this is fresh, right? It doesn't look weak at all right now. It's just made a new high. It looks new. I think there's a good amount of psychology. There's something to be said for the psychology behind something being new and having, less of a price history and more potential ahead of it, even though we know how they all end up. XRP, very clean. XRP, very clean. Talk like a caveman. XRP, very clean. Into a low volume region, breaking out of this consolidation the last couple months. You have a consolidation up here, but you have this little gap. So we gapped on the way up, gap on the way down, consolidate. We consolidated back within a prior consolidation. So more the same things that I talk about, right? Accepting back within a range. Usually it's very accommodative of price to do the same shit. So now if we're reversing, kind of expecting price to go from this retest back up to at least the underside of that structure. So I think this has legs. I think honestly, if everything is bottoming right now, I don't care what XRP does or what it doesn't do. It'll have its run as well. But for the most part, alts are at high time frame resistance. A lot of them are at high time frame resistance. So it is a good area to manage positions at least. You are seeing a lot of them blow through, but I don't think you want to open up fresh positions if you're at resistance. Set your alerts, step away, pick your levels, honestly, because if this is going to continue for some time, patience is your friend. It's easy to get into that mode of feeling like you're getting left behind. But all you need to do is keep a mental note of charts that are overextended and the time where you looked at them and thought, fuck, like that's getting away from me. Like, should I just ape in right now? Put a mark on the chart, right? Put a mark on the chart and just show yourself one example of it coming back and retesting the level and then continuing. And you'll see that it's more often than not the case that these things get chased out. You have people shaking out because people are using leverage. The market pulls back and you're getting retests of structural levels. And then at that point, it's on you to actually have the balls to get in. Audio just ripping. So you'll see a lot of things are going to be ripping, but you'll look at the pair and you'll see that it's like, very low cap. Yeah. Let's see. BTC above that 30.23 level. So again, I think that ultimately we're looking at a move. We don't have any kind of, you have relatively equal highs right now. So it's unlikely that gets left behind. Unlikely that gets left behind with the acceptance outside of yesterday and the prior day's composite. Equal highs, no retest of this high. So you got a bunch of reasons to say that this probably continues a little bit further up. And since we had the footprint out, what do you want to see with a footprint when you're breaking through a level like this right now? So if we're looking at, we're going to find the exact level. It's right around, what do you say, 23.1. So yeah, 23. This high is 23.34, but that's the index. But we'll say today's, if we're back above today's value, 23.50. So what you want to see is ultimately, you don't want to see this continue, right? These zeroed out prints. Obviously we came back through that and the market remained bid there. But what you want to see is that actually these levels get sold. So if we break above 23.50, if you're monitoring this in the low time frames, seeing that the market gets sold into as it moves higher is a good sign. So this, for example, right here is a good sign. So that 8 million, that 3.6, 3.2, that means that as the market is pushing up, that it's weathering the selling that's coming in. Like that's a good bid. That's a firm bid right there. The best case is that you pull up and you're not buying into something that's just vertical, but you pull up above something like 23.50, pull back, and then have something develop where you sell into the level and then the market is leaving the level but remaining bid, right? So after leaving the level, so after, for example, breaking through this little consolidation, remaining bid, right? Seeing that size is coming in, and this is Binance, so it's it's lower to say 3 million is lower compared to something like Bybit. But you see that the level is sold, and then as the market moves up out of there, just imagine that if you have, we're breaking above 2350. The retest we see, let's say, occurs on 10 million delta, or we're looking at 10 million at the bid, not even negative delta. All right, so 10 million contracts sold. And now let's say the market is trading slightly higher and we have 10 million contracts sold. And then we have 12 million contracts sold. And all the while the market is moving up. All right, so more selling is coming in, yet price is obviously not being affected by it. And that's the kind of retest that you want to look at occur if you're looking at like a footprint chart. There's a lot of other things you could gauge from it, right? Levels of liquidity, little air pockets. Again, whether the market is remaining bid or it's remaining offered. But at least in this move up, that's one thing that you could look for. I think I'm probably going to, my neck all right? Yeah, it should be all right. I'm getting old. I think I kind of covered everything I wanted to cover. Yeah. Yeah, I don't see this as the high yet. Notice that I'm saying that, though, and it doesn't mean that I'm just, 100x longing this with everything I have. Because I think that the danger is you get to one of those moves, and it does something like this, where a big move, consolidation, smaller move, smaller consolidation, and it is speeding up, but it's getting parabolic at some point, where the wipeout from this does something really ugly. And the point is, like, you have to weigh and consider your slip. Right? For that extra I put on, is it worth it? Especially if it's new positioning. So if you're already positioned, that's great. So I'm already in spots, so it's a different story. But adding fresh positioning, yeah, you could do it with a tight stop, but and this might be worth it, right? Breaking above that level, just target at least the high. Yeah, Sin is working out. So, I mean, someone just asked any trade ideas. I mean, have you been watching it all? Because I've gone over Ape. I've gone over Kava so far. Hook is Ethan. Hook is actually this same setup as Magic, basically. So fresh chart. Limited history, unlimited potential, right? That's kind of the way that comes across. All right, guys, but I'm going to wrap it up. Thanks for tuning in. If you have any questions and stuff you want to see in future streams, leave a comment on my most recent video. So I'll actually show you what to leave a comment on. This post right here. All right. And I will try to make sure that I take that into consideration for the next stream. And yeah, until then, I would just say play it safe still. I'm looking at a market that looks like it's strong. I think the bottom is in. But that doesn't mean the bottom doesn't get tested again. That doesn't mean that we are out of the woods with nasty pullbacks. I think we're going to get a reality check. So, yeah, you have light mode if you're like, a normal person, I feel like. You only have dark mode if you're like in a basement and you're in the dark. Otherwise, like, I don't want to have light mode right now. I'm in a sunny room dark mode. Oh, last thing. These have kind of been not as significant recently. We haven't had as many, obviously. But core PCE. This is the most important one for the Federal Reserve. So as far as inflation goes, that's this Friday. So that should be interesting. Should offer some volatility to trade around. I do think we have a good period though ahead of us. And yeah, take advantage of it while you can. But don't again, if you're positioning right now, don't think that this is like, if you're buying an alt right now, don't think you're out of the woods. And I know people will say that, and it's like, all right, it doesn't do anything for me. But if you're buying an alt right now and you're thinking you're not going to get tested 15, 20%, well, you're wrong, because there's no way that, for example, the yearly opens for almost everything look like this. So everything really strong, holding the outer range of 1 to 2 standard deviations away from the yearly VWAP. Thinking that we're going to just continue that way is like imagining the market is like just one-sided from here to the end of the year. Like, you wouldn't look at the S&P right now and think, okay, well, we're up, since the beginning of the year, we're up 5%. This is going to be the best year on record. We're just going to continue like this. On average, you could expect what, 7 to, I don't know what the figure is anymore, 7 to 13% a year. That's a wide range, but there's no way that we just continue up the way we are, which is, again, kind of, I don't want to say overbought, because, again, the first line of thinking with a lot of people who use indicators like RSI and momentum indicators is that is a sign to be bearish when they're overbought, instead of looking at it like, wow, this is first time in a long time we have a lot of momentum. I'm going to get behind this. But positioning wise, off the open like this, off the yearly open, it's very unlikely we don't come back down to retest some of the lows we put in on the way up. Almost impossible, basically impossible. We always revert to the mean at some point. And remember, mean reversion is mean. All right. That's it. Check out Phemex if you haven't already. TradePhemex.com. There's a bonus still. Do your due diligence, though, for wherever you are, whatever product you're using.